$2 trillion. Let that number sit for a second. Not stolen, not hidden under a mattress. Laundered, cleaned, disguised, and injected right back into the global economy every single year. That's more than the entire GDP of Italy, more than everything Canada produces in 12 months. And the people behind it aren't hiding in some underground bunker. They're in boardrooms. They're in law firms. They own the towers you walk past every morning. Here's what makes this truly disturbing. The governments, the regulators, the financial watchdogs, they know exactly how it works. They've known for decades, and they still can't stop it. Or worse, some of them have decided not to try. Today, I'm going to show you exactly how billions in dirty money disappear in plain sight. The methods, the systems, the people who benefit from keeping it broken. By the end of this video, you will never look at a luxury apartment, a crypto wallet, or a major bank the same way again. What is money laundering really? Before we get into the mechanics, let's make sure we're on the same page. Most people think money laundering is a movie plot, a guy washing drug cash through a pizza shop. That's not entirely wrong, but it misses the scale. We're not talking about small operations run by desperate people. We're talking about a global financial infrastructure, one that serves billionaires, dictators, and corporations, built specifically to make crime look legitimate. The concept itself is simple. You have money that's dirty. It came from drug trafficking, fraud, corruption, sanctions evasion, human trafficking. You can't deposit it in a bank without questions. You can't buy property with it without raising flags. So you need to transform it. That transformation happens in 3 stages. Stage 1, placement. You get the dirty cash into the financial system any way you can. Cash-intensive businesses, crypto exchanges, wire transfers through cooperative banks. Stage 2, layering. You move the money through as many transactions, accounts, and jurisdictions as possible. The goal is to make the trail so complex, so fragmented, that investigators can't follow it. Stage 3, integration. The money re-enters the economy as clean, legitimate capital. It looks like business income. It looks like investment returns. It looks like a successful sale. And just like that, crime pays handsomely. Now let me show you how this actually works in the real world, because the methods are not theoretical. They're being used right now, today, at a scale that should make your blood run cold. Method 1. Shell companies and ghost empires. Let's start with the oldest trick in the book, and the one that's still completely unstoppable. You create a company. Let's call it Sunrise Global Trading, LLC. It has a professional name, a registered address, maybe even a website. It files its annual paperwork. It looks, on paper, like a completely legitimate business operation, except it does nothing. It sells nothing. It has no employees, no clients, no product. Its only function is to receive a wire transfer and send one out. Money arrives from Company A. Sunrise Global wires it to Company B. Company B is owned by Company C, registered in the British Virgin Islands. Company C is controlled by a trust in Luxembourg. The trust is managed by a law firm whose nominee director, a person paid simply to sign documents, appears as the official owner. Who actually owns all of this? Nobody. Or more precisely, someone who will never appear in any public record, in any jurisdiction, on any database. By the time a financial investigator tries to unravel this structure, they're dealing with 14 different legal jurisdictions, 40 corporate layers, and attorney-client privilege shields at every turn. Most investigations collapse before they even begin. This isn't a hypothetical. This is exactly what the Panama Papers revealed in 2016. 11 million leaked documents from a single law firm. Mossack Fonseca, world leaders, heads of state, oligarchs, CEOs, all using this exact architecture to hide money from tax authorities, creditors, and law enforcement. The firm was shut down. The money was not, and the structure it created is still being replicated thousands of times a day in dozens of jurisdictions by lawyers who charge $500 an hour to make sure it's technically legal. Method 2. Real estate. Buying cities. Think about the last time you walked through a wealthy neighborhood and noticed a building that just seemed off. No lights on, no movement, beautiful on the outside, completely empty on the inside. You probably thought, who owns that? Why would anyone buy something and just leave it dark? Now you're asking the right question. Real estate is the single most elegant money laundering vehicle ever invented, and it's been hiding in plain sight for decades. Here's how it works. You have $5 million in dirty money, drug proceeds, bribery payments, whatever the source. You set up an LLC. The LLC purchases a luxury apartment in Miami. Cash deal, no mortgage, no bank financing, no credit check. Nobody asks where the money came from. The apartment sits empty for 2 years. You take a small loss on maintenance costs, then you sell it for $6 million. You have just converted $5 million in criminal proceeds into $6 million in clean, taxable capital gains. You didn't just launder it, you turned a profit doing it. Studies on New York City's real estate market found that over 30% of luxury property purchases above $5 million involve anonymous shell company buyers. In London, entire neighborhoods, Mayfair, Knightsbridge, Belgravia, contain significant numbers of properties owned by offshore entities with no disclosed beneficial owner. Method 3. Crypto, NFTs, and digital smoke. Now let's talk about the method that has financial regulators completely lost. And I want to be precise here because the popular narrative is wrong. Bitcoin itself is actually quite traceable. Every transaction is recorded on a public blockchain. Law enforcement has gotten remarkably good at following Bitcoin. So no, crypto is not the problem the headlines make it out to be. What is the problem is everything that comes after Bitcoin. Here's the layering playbook for 2024. You start by converting dirty cash into crypto through a peer-to-peer exchange. No identity verification, no KYC, no paper trail. You then run it through a mixing service, a protocol that combines your coins with thousands of other users' transactions, breaking the chain of custody entirely. Then you convert into Monero, a privacy coin that uses advanced cryptography to make the sender, the receiver, and the amount completely invisible, even to the blockchain itself. Then you cash out through an unregulated exchange in a country that doesn't ask questions. The entire process takes hours. The money is gone. And then there were NFTs, which for a brief window may have been the most efficient laundering tool ever created. The mechanism is almost insultingly simple. You create a digital file, an image, a sound, anything. You mint it as an NFT. Then, using a separate wallet you control, you buy that NFT from yourself for $2 million. You have just conducted what looks like a legitimate art sale. The money that entered as dirty crypto exits as proceeds from an art transaction. The United Nations estimates that crypto-based money laundering is growing at 30% year over year. Chainalysis, the leading blockchain forensics firm, has stated publicly that they cannot trace more than 20% of flagged suspicious transactions. The other 80%, gone permanently. Why governments fail, or choose to. This is the part of the story that's hardest to accept, because it requires us to look at an uncomfortable truth about how power actually works. Governments aren't simply failing to stop money laundering. Some of them are architecturally dependent on it continuing. Consider the British Virgin Islands, the Cayman Islands, Luxembourg, the state of Delaware in the United States. These are not accidental tax havens. They are deliberately engineered jurisdictions whose entire economic model is built on offering financial secrecy to the world's wealthy. The BVI's government derives an enormous share of its revenue from company registration fees. Shutting down the shell company industry wouldn't be a political decision. It would be economic suicide. And in larger democracies, the mechanism is different, but the result is identical. The uncomfortable truth. So here's where we land. $2 trillion laundered annually through systems that are well understood by players who are often known, using methods that have been documented for decades. The tools to stop it: international beneficial ownership registries, mandatory real estate disclosure, crypto regulation, banking accountability. They exist. They've been proposed, debated, and drafted. They're just not being implemented. Not at the scale required, because the people who benefit most from dirty money flowing freely through the global financial system are the same people who write the rules around it. They fund the political campaigns. They hire the regulators when they leave government. They are, in many cases, the government. Money laundering is not a failure of the system. For the people at the top of it, it is the system. The question is not whether this will be fixed. The question is whether enough people will stop pretending it's broken by accident. If this video changed the way you see the world, even slightly, that's exactly why this channel exists. Subscribe if you want to keep pulling back the curtain. And drop a comment. Which industry do you think is the most corrupt that nobody talks about? Because that is very likely going to be our next video.